Google and Anthropic now officially announcing that new cloud deal worth tens of billions of dollars for access to custom AI accelerator chips. Our Mackenzie Segalos has more on what it means for the cloud landscape in today's Tech Check. Morning, Mac.
Hey, good morning, Carl. This is Anthropic betting big on Google, committing to use up to 1 million of Alphabet's custom-built AI chips in a deal that, by industry standards, could be worth around $50 billion. Now, this build adds more than 1 gigawatt of compute by 2026. That's enough to power 750,000 homes. And yes, OpenAI has announced future commitments worth 33 times that, but this deal, it is locked in, coming online next year, and tied to explosive enterprise demand. Claude now powers more than 300,000 businesses, with revenue approaching $7 billion this year. Now, what's also at stake here is the unusually complicated dynamic between Anthropic, Google, and Amazon. So by deepening its ties to Google, Mizuho says that Anthropic is signaling concern that Amazon's in-house silicon hasn't kept pace, calling it a competitive win for Google, and a sign that the balance of power in AI infrastructure may be shifting. And it comes as that cloud race heats up. Amazon, it is still the leader here, but its dominance is no longer what it once was. Microsoft's enterprise momentum is accelerating thanks to OpenAI. And now Google and even Oracle are gaining ground off the back of that OpenAI Halo 2. Still, Amazon has poured $8 billion into Anthropic, built Claude's custom supercomputer, and it remains its primary cloud provider. But this week's 15-hour AWS outage was a reminder of what's at stake. While some services went down, Claude stayed online, which was a real-world stress test showing the value of Anthropic's multi-cloud strategy across Google, Amazon, and NVIDIA. And all of it lands just ahead of hyperscaler earnings next week, where investors aren't just tracking CapEx, but they are looking closely at which platforms are actually delivering on their cloud business. Guys?
Yeah, it also speaks to just this whole notion of build, buy, partner, and how we should be thinking about the broader space. Is there any indication or any early indications to which strategy appears to be working, appears to be more favorable at this point in time?
Well, the big question now is who's going to up their CapEx commitments. You've got Microsoft and Amazon that are at the top end of that band, around $120 billion committed for the fiscal year. But now that's dwarfed by OpenAI's commitment of 33 gigawatts. That's roughly $1.65 trillion. And so the question is, are they going to up their spend? And part of that AWS outage was a product of the fact that its legacy infrastructure on the East Coast, it was built for a different type of customer, and it's just not as up to date, and as we deal with all these Gen AI workloads that are really asking a lot of these cloud providers.
Of course, the big difference between the hyperscalers and OpenAI is those hyperscalers, they're not dipping into debt. They're not having to finance much. That's part of Goldman's rationale that all of this spending, the consensus on CapEx is still probably too low in their view.
Mm-hmm. Precisely. And think about how OpenAI has been looking to structure some of these deals. They're swapping equity for chips in order to support this this massive build out with NVIDIA. It's a $100 billion stake that they're taking in OpenAI. They're also working with AMD. They're also working with Oracle in these custom arrangements. But it's all for compute that doesn't exist yet. They're actually looking to go build this infrastructure themselves. This Google Cloud deal with Anthropic, it's real and it's coming online imminently.
Yeah, it's all so fascinating. Mac, thanks for staying on top of that for us.